Lower crude prices mean fuel retailers can earn higher margins, marketing margins that is, and the coronavirus outbreak has ensured that crude prices remain subdued. But the weaker rupee might have taken some of the zing out. And then there's an issue of inventory, which predictably had been bought at a higher price. Joining us right now to give his reading of the financial impact on OMCs is Mr. MK Surana, Chairman and Managing Director of HPCL. Mr. Surana, good having you. Thank you so much for taking the time out, sir. How do you read into this situation? We'll get to the aspects of demand as well. But first, the impact on oil marketing companies as a result of all that's happening.
So most of us, oil marketing, refining and marketing companies, as far as marketing is concerned, our domestic prices are aligned to international prices, and that more depending on the prices of petrol, diesel, LPG in the international market. As far as refining are concerned, that is guided by the refinery gross margins, where lower crude prices helps actually because the cost of the fuel which we burn in the refinery is lower. But at the same time, if there is a sudden fall in the crude prices, it does lead to some inventory losses. Also, because of the coronavirus, there is a sudden availability of many of the cargoes which were otherwise China-bound. To that extent, the premiums have reduced on crude, or some crudes are also available on discount. To that extent, it helps refining margins. But on the other hand, the product tax have been on lower side, which has kept the refining margins not to increase substantially. As far as marketing is concerned, the marketing margins gets guided by certain formulas depending on the international prices, and so the domestic prices gets aligned to that. As of now, we have got a reasonable marketing margins, but it is not direct correlation that the crude prices, lower crude prices automatically result into higher marketing margins, except that the lower crude prices helps in better working capital management.
Sir, okay, let's work with the presumption, or let's work with the answer that there is no direct correlation. But having said that, because there are gains, and because crude prices are as of now not showing any signs of an uptick, would you reckon in the near term this augurs very well for the marketing margin performance, and thereby how companies like yours do in the current quarter?
As I mentioned to you, the crude prices are not directly correlated to the marketing margins.
Yeah, it may not be a one-to-one correlation, but they will benefit, I'm guessing, a little bit out of this, right, sir?
No, the lower crude prices actually will lead to lower product prices, and to that extent, the consumers get benefited of the lower product prices. That is one thing. At the same time, there is no pressure on marketing companies to not to be able to recover their cost or the reasonable margins. To that extent, helps. If the product prices are high, then we need to ensure that the demand doesn't get distracted because of higher prices. At the same time, these are all sensitive commodities, so there is no pressure on the consumers. So the lower prices, to that extent, helps in marketing companies to ensure that they have the reasonable margins.
Right. Mr. Surana, just coming to that point which you made, that, the rare grade of crude that were earlier on more expensive, that used to make its way to China, now are available at a more reasonable rate to retailers like yourself. Could you tell me the differential in the cost savings that you're seeing, and also the fact that shipping rates have plunged to nearly half since the virus outbreak? How is that going to help?
Yes. So to that extent, the shipping and the insurance rates also, which has gone up substantially because of the Middle East tensions in between, they have come to a lower level. And that was a cost as far as refining companies were concerned. To that extent, that helps.
What extent, sir? If you could just quantify it a bit.
I won't be able to give you immediately the figures because these are changing also. But definitely, it has come substantially down from, rather let me put it, the normal rates, insurance rates and the freight rate had gone up substantially in between after the attacks in Middle East, etc. It has become almost double.
Okay.
That has come down after that, and this coronavirus, etc., has further depressed the shipping rates and the insurance.
All right, so that will definitely help you further. So, we've been talking about, how these rare grades have been coming to you. So, have you...
No, I didn't say rare grades. Even the normal crudes, when you procure in the spot,
right,
depending on the demand supply situation, you may have premiums on the OSP prices.
Okay.
So when the availability is more, those premiums come down, or sometimes they are also available on discounts.
Okay, but
I didn't say rare grades. I said the same grades also may be available at a lower price.
All right. But, sir, my question was, are you looking at acquiring any of these rare grades now that they're available to you at a cheaper price? Because, we've been talking about BPCL getting from Brazil, Mediterranean, CPC blend. They're looking to take 1 million barrels from there. Anything on that planned for you, acquiring any of these grades?
No, each refinery, depending on their configuration, has got a basket of crude which they can process.
Okay.
And there is a economics, which is optimization model, which runs to find out which crude is the best suited, depending on the price of the crude at that time, and the product worth which we have in that crude. So, depending on that, we also keep on looking at the crudes which are available to us, and which is the best technically and commercially suiting crude. That's what we buy. And to that extent, we also take the possibility of leveraging the opportunities which are posed to us in the environment.
Mr. Surana, you said lower prices, they lead to lower product prices. Is that also having a positive impact on the demand? Because if you look at the oil demand in the month of January, that had declined by 0.5%. So are lower prices having a positive impact on demand? And also, if you could tell us, what's the outlook on prices going ahead? I think there's a meeting this week of OPEC countries. There's talk that they would cut down on the output, which can lead to further rebound in prices that we've seen in the last 2 sessions.
No, currently the demand scenario is also guided by a number of external factors, the general economy, etc. But while a lower price may not automatically increase the demand, but a higher price definitely do have an impact. That's one thing beyond a threshold line. The lower price of LPG definitely helps in increasing the LPG demand, especially when now substantial number of below poverty line people are on the LPG platform.
Okay.
So affordability increases to that extent.
Okay. So that's interesting. You're saying it's not having a positive impact on demand. What's the outlook on prices then? We've already seen prices rebounding just in last 2 sessions. Will this trend continue if OPEC countries and the allied countries go ahead and cut the output target for the year?
Let's see, there are the issues both on the which can increase the price or which can reduce the prices further. Definitely the demand side is a weak demand scenario. If the supply side, even if the OPEC are to decide to cut certain production levels, then also we need to see whether it will actually increase the prices or it will be just the momentary spikes which we see.
Range would be comfortable for you all.
So anything in the range of 60 is a reasonable crude oil price, which we have seen earlier, both from the supplier as well as the consumer sides.